All right, investors aside, and they have chosen sides, the question now is, what's going to drive this outcome? The AI debate obviously has to be resolved, or at least reconciled with investors. And you know, you look at this, the U.S. economic conditions also will play a major role here. And okay, and so anyway, while we wait for all of those things, it seems good old-fashioned valuations really have come into place, right? And one thing I want you to keep in mind, you always hear about how the U.S. market is so much more expensive than the rest of the world. That is true on a cap-weighted basis. However, when you measure equal weight, the U.S. is right in line. You can see it right there. I want to bring in now NewEdge Wealth, their Managing Director, Portfolio Manager, Jay Peters. Jay, what do you make of the fact that the U.S. now, I mean, listen, if you look equal weighted, we're not as expensive as the rest of the world, and I think maybe that makes us more attractive for folks who are just out there seeking value, for lack of a better word.
Yeah, absolutely, Charles, and thank you for having me. And I'd say, you know, when you look at the U.S. equity market, you kind of have to respect the healthy earnings momentum we're seeing, and it's allowing the S&P to kind of grow into its multiple, and we're also seeing, you know, healthy economic trends, moderating inflation, fiscal and monetary supported fiscal and monetary policy, right. And we think in that environment, equities can continue to perform well. But
so I did read you came into the year constructive, right? And you remain constructive in part to, you just mentioned earnings. I want to bring up a chart here so we can just share with the audience, right? So quarterly earnings trending higher. This is something very important. And then for the rest of the year, essentially going to trade higher. I guess this is the backbone, right? This sort of justifies the market being where it is or even higher.
Yeah, absolutely. This is a key fundamental pillar. We're on pace for our 5th straight quarter of double-digit earnings growth on the S&P 500. You're continuing to see those expectations for future quarters be revised higher, and those are powerful drivers for the overall equity market, and definitely go a long way to supporting the valuation. And as you pointed out, we've come a long way in equities over the last couple of years, and we do think this market will be increasingly driven by those fundamental measures like earnings growth.
Right.
And you know what's interesting to see is that the rotation that's occurred over the last couple of months has been quite powerful. We've seen a lot of companies that have been kind of left behind really start to participate. I think that's a healthy sign for the market as well. If you look at the S&P 500, 60% of stocks in the index this year are actually ahead of the index year to date, right. and that's more than double.
Ironically, it's a better year than most years if you just base it on certain metrics like that, like individual names are doing well. Within this construct, let's talk about what you like to see in terms of stock selection, strong fundamentals. You look at profit margins, free cash flow, capital efficiency, solid balance sheets. For a long time, people were ignoring some of these things. You didn't have to worry about it, but it's more important now, right?
Absolutely. And well, we talk a lot about investing in quality, but I think what it comes down to is investing in companies that are able to produce durable earnings growth and consistently compound earnings growth. And earnings growth is really drives 90% of the market's performance in the long run. And these metrics, like having leading profitability, having healthy free cash flow generation, that provides a lot of flexibility to companies, not only to return capital to shareholders, but to navigate any kind of economic cross currents. Certainly capital efficiency is important as well. You know, we like companies that are able to grow without having to finance that growth through debt and equity market issuance, and ultimately solid balance sheets as well. Companies that can you know, a solid balance sheet helps you navigate, you know, difficult economic.
And notwithstanding the industry someone's in, this in of itself is a moat, right? This is the kind of moat that you want to maybe invest in. So let's talk about some individual specific names. One name you like here is Netflix. Netflix has been coming down a lot now. You know, I wonder if maybe they're being victimized, for lack of a better word, by YouTube. You know, just I know what they've done. They've got a remarkable track record, but recently it's shown this unusual weakness, even after some pretty good earnings reports. Absolutely,
and we've seen Netflix reprice substantially over the past sort of 6 to 9 months. And in our view, this is a high quality growth company that is trading at a much more attractive valuation today, largely driven by those concerns and the uncertainty around the Warner Brothers acquisition. And Netflix, in our view, is a business that continues to perform well. You look at the 300 million active users growing 6 to 8% annually, healthy ad business that continues to show a lot of momentum. And
so what you're telling me is the stock used to be 135 at 77, it might be on sale. Let's look at NRG, because this is a theme. I think it's hard to find someone who's not excited about this theme. But again, stock had a hell of a move, really, especially last year. They've been moving a little sideways. Some of these names are trying to break out. This also trying to break out. What do you see here?
I agree. Trying to break out, definitely a powerful secular theme. One of the biggest beneficiaries of AI and infrastructure build-outs and power consumption, and NRG, in our view, is another one of these like higher quality utilities plays. Obviously, a name that's going to be hard to be disrupted by AI, and ultimately probably benefiting from all the AI compute demand. And NRG is one of the largest independent power producers in the country, 25 gigawatts of power generation. We continue to see power as the biggest bottleneck in the AI infrastructure.
Yeah, I think everyone agrees with you, right? It's starting to switch from, to sort of storage, memory, and everyone's saying, no, get back to this. You got to have the power or we don't have the AI things. This is an interesting one you've got coming up. Allison Transmissions. Hadn't heard this name in a long time. It's been all over the place, full of sound and fury, and almost at the same place it was a year ago. What do you like about it?
Yeah, so as you can see, definitely one that's participated from this rotation in the market and this bid for more economically sensitive companies. And Allison is a kind of an under the radar gem in our view. This is a company that has about a $10 billion market cap, a real leader in the manufacturing and design of automatic transmissions. And they're focused more on the heavy duty segment. So these are the workhorses of the road, the buses, the trucks, the military vehicles and construction equipment. And this is an industry that's certainly gone through a bit of a cyclical downturn over the last couple of years and is now just starting to reaccelerate. And for Allison, again, we like the valuation at 12 times earnings. It's about a 50% discount.
So obviously you love the risk reward here. Before I let you go, your thoughts on the Mag 7, because they've come down to the point now where value guys are starting to kick the tires and take a closer look.
I agree. They are looking more interesting today than they have in quite a while. I think at a mid-20s PE, these are still incredible companies that are not only growing at 25%, I believe, for the Mag 7 for the most recent quarter, but premium revenue growth, great business models. I think at some point there are a lot of concerns about the capital intensity of the hyperscalers, but I think the valuations are starting to get to a level where you can be a bit more selective and start to add some exposure here.
Good stuff, Jay. Thanks a lot.
Great, thank you.